Structurally, the trade war with China is a huge loss for humanity. There's no other word for it. By bifurcating the technology stack between our two great nations, we are creating a world where, one, the Chinese have a huge incentive to engage in their Manhattan Project of semiconductor production. And the Chinese graduate about 4 times as many STEM graduates as the US does a year. I think we're pretty naive to believe that we will have a permanent dominance given the strength of their engineering capabilities. And then if you march forward 3 years, 5 years, 7 years, as the Chinese tighten the gap between the US and the West's capability and technology and their capability, I think you have the risk of a global fracturing of the tech stack, where you'll see the Wintel stack, Windows, Intel, of course, Intel today is Intel AMD, will be the dominant solution for Western firms, but the Chinese will provide the solution used by South America, used by Africa, potentially used by India. And that will really fracture Western domination in technology, which has been such an incredible source of high-paid jobs in America and American prosperity. I mean, for the state of California, the tech sector is just a huge part of the revenue tax base.
Wouldn't you agree, though, that the Biden administration is in a tough position? On the one hand, there's intelligence, or at least informed speculation, that China is using advanced American semiconductor technology in next-generation weapon systems. There's also bipartisan support for a tough stance on access to American technology by the Chinese government and Chinese companies. These things, if the former is true, and we know the latter is the case, shouldn't it warrant, at the very least, some concern, if not action, by Washington?
So first of all, there has been action that's important. The CHIPS bill is a really important piece of legislation. The United States has no ability to produce anywhere near the number of semiconductors it needs to run its economy. We are utterly and totally dependent upon the Taiwanese for modern semiconductors in America. Now, you could argue that by depriving the Chinese of access to semiconductors, we actually up the ante of the risk that they seize Taiwan. So it's not necessarily clear that we get the outcome that we want by depriving the Chinese of this technology. They could resort to other methods to secure this needed technology for their economy if they so choose. We're playing with fire here. Like, let's be very clear. Semiconductors, if we lose access to the Chinese or the Taiwanese semiconductors, hit the US GDP is probably order of magnitude 5 to 10%. It's an immediate Great Depression.
Those are big numbers.
Those are big numbers. So the CHIPS Act, really important. Encouraging STEM degrees in America, really important. But what worries me is this sense in the halls of Washington that the West has a God-given right to be superior in its technological prowess when the facts would argue to the contrary. And we need to be very thoughtful about how our economy functions, what creates jobs in America, what creates prosperity for our country. And by forcing the Chinese to accelerate their R&D programs, I think we're buying very little in the way of strategic advantage at a substantial long-term cost to our economy and our way of life.
What I want to know from you, Ken, is what do you make of the spectacular collapse of Sam Bankman-Fried's FTX?
Look, FTX is one of these absolute travesties in the history of financial markets. I mean,
people will lose billions of dollars collectively.
People are going to lose billions of dollars, and that undermines trust in all financial markets. What we do know is the balance sheet shows a giant black hole. And there's no doubt that customer assets were used to make investment decisions in favor of FTX's shareholders, which didn't work, at the expense of the customers. That's not permitted in American broker-dealers. You can't just use your customer assets to go engage in proprietary trading. That's a huge no-no. So FTX, billions of dollars have been lost here. The confidence, though, of a generation in financial markets has also been shaken. And that's really awful because the 20-some-year-olds to 40-year-olds who are so engaged in crypto, they've got to save for their retirement. And if they don't believe or trust in financial markets, this is a huge problem. They need to own stocks. They need to own corporate debt. They need to partake in our global capital markets. Now, with FTX, there are a few points here that we should talk about. The turf war by American regulators has got to end. It's just preposterous that, without naming the agencies, they all dance around who owns what, and the bottom line is American investors have really gotten hurt here to the tune of hundreds of billions of dollars in decline in market cap and crypto over the last 2 years. I mean, that really strikes at the entire core or essence of what's investor protection all about. The second is that FTX crosses into a zone that all of us are worried about. You know, on the balance sheet of FTX is a line called Trump lose. And Sam was the second biggest donor to Democratic candidates.
I'm going to leave it to everybody else to draw their own conclusions about what you're saying here.
Right? Those are really, really ugly facts when you see a fraud of this magnitude having played out, and you find no regulators were there to prevent it. That's a really, really tough story.
What is your intel and what is your gut telling you about the state of the world right now?
That's a great question. So the state of the world right now, there's been two big debates. Are we heading into recession? And what's the trajectory of inflation? And of course, the two are intertwined. I think we've been a little bit out of consensus. We have felt that we would not have a recession this year in 2022. And in North America, that's borne out to be true. We're highly confident we're going to finish this year on a modest growth note. Now, the issue, of course, is 2023, when the lagged effects of the Fed having increased rates will really start to grind on the economy. My team, for choice, thinks 2023, we avoid a recession. I'm a little more skeptical about that. I think that for the Fed to truly conquer inflation here, we're going to put unemployment somewhere with a mid-4 handle, and I find it hard to believe we're not going to have a recession at that point in time, sometime in the middle to back half of 2023. On inflation, we think we've seen peak inflation. Now, owner's equivalent rent, which is a big driver of inflation, because of the way it's calculated and estimated, we'll see that continue to show inflationary pressure for the next few months. But spot rental rates appear to have peaked in many metropolitan areas a few weeks ago. And then energy prices are likely to roll over in 2023 as compared to their 12-month prior. So two of your really big drivers of inflation, energy, rent, we think we've seen a peak in. And then across goods, we think this is going to be a really good holiday season for consumers because American companies have built up such a substantial inventory of goods that they're going to need to sell here heading into the holidays. So we think we're going to see pretty good pricing for consumers as goods become very attractively priced to move them out of warehouses.
What would you flag as the biggest risks right now?
In terms of risks that we think about a lot in our portfolio right here, right now, you know, obviously the war in the Ukraine is front and center because the war in the Ukraine is driving an energy crisis in Europe that is almost incomprehensible. We're going to see, and this winter, fortunately, we're going to see just limited rationing of energy. But if this war doesn't resolve by next summer, by this spring, next winter could be a much more difficult journey for Europe to get through in terms of gas supplies. So I think the duration of the war in Ukraine is an existential issue for Europe, for Germany in particular. And will the Germans maintain their willingness to support the Ukrainians as the cost to their economy continues to grow? And in particular, if winter 23-24 could involve a full-on energy crisis, what happens to the German psyche in supporting their neighbor in Europe? So that's a really big issue right here, right now.
Click this video to watch Frank Giustra reveal why we are headed towards a great monetary reset and how to secure your wealth during these times.